Well. Look who's getting the last laugh, ladies and gentlemen. Welcome back to Strongman Personal Finance. Now, I've been known to make fun of Elon Musk, who I call Clown Elon a Muskrat. And I'm known to say that Tesla stock is overvalued massively and that Tesla is a luxury auto manufacturer. I've said that innumerable times. Can't even pronounce my words straight tonight. But you know what's even more of a luxury auto manufacturer? You know what's even more of a clown stock? That would be Lucid. Now, Lucid had their earnings. We're going to go look at the stock price action because nothing is more important than short-term price fluctuations in a stock. And then I'm going to give you the quarterly results from a certified CPA accountant's perspective. So let's go ahead and pull up Lucid. The first thing that I notice is that the stock is down 9.27% after hours. Should you buy the dip? I don't know. Let's look at the prior history. Let me make sure I'm sharing my screen. Let's look at the prior history. Okay, Lucid has basically went up in a massive clown bubble. And since, late 2021, it's utterly collapsed. Its current market capitalization is $16 billion. $16 billion. Now, you may ask yourself, why? Why does this company have a almost $17 billion market capitalization? How many cars are they producing? Well, if you go look at their numbers, okay, let's see how many cars they produced. In 2022, we scaled every part of our business while keeping a sharp focus on execution. In our first full year of production, we manufactured 7,000 vehicles and delivered 4,369, generating revenue of $608 million. What is the price to sales of this company? Oh my Lord! This is the most richly valued company probably in the whole freaking auto market. This is nuts. 608 million of revenue. Now, it's all about the future, right? It's all about future revenue growth. But here's where I get really questionable about Lucid. And we're going to look at the financials, okay? I have looked at Lucid's prices. Well, first of all, I want to point out something. The Lucid Air, here's a quote from Auto Express. Who's that? Who reads that? Does somebody actually buy and read a car magazine? Freaking losers. The Lucid Air is head and shoulders above a Tesla Model S. That's actually a very apt title. I don't know if that's a quote or a title. That's actually very apt because they're comparing it to Tesla's luxury car. All right. Tesla makes a bunch of luxury cars. They're all expensive. They cut prices recently. We'll see what happens to their profits. But they actually have higher end models. And one of those is the Tesla Model S. They are comparing Lucid to Tesla's most expensive car. So if you think about bands of competition, who can afford a Tesla Model S? I would hazard a guess that maybe the top 10% of Americans can afford a Tesla Model S. I can pull up the data, do more research. I don't have freaking time for that, okay? The Model S, how much does the Model S go for? Let's go ahead and look at that up. Let's see. Tesla Model S cost. Okay, the dual motor Model S begins at an MSRP of $94,000, $95,000. $95,000. I don't think your average Joe Blow is buying a Tesla Model S, okay? Let's go see how much Lucid's costs. I bet you they cost a freaking arm and a leg. And I say this because I'm very concerned about the valuation of this company. Why? Because they're insanely expensive. The target market of this company is what? Who can afford these things? Look at the Touring, even with the freaking tax credit. The Touring, $107,000, $138,000. Oh my Lord. Now, I can't make fun of Tesla. When I look at this company, I can't make fun of Tesla. I can't. At least in comparison. I can still make fun of Tesla. But this is the clown stock of the clown stock, okay? Insane. Now, let's go ahead and look at their financial statements, okay? I want to just point out some things, and I'm just going to give you my initial impression, okay? And I want to teach Jeremy Lefebvre something because he has a hard time understanding financial statements. And it's good if Jeremy's going to grift people, at least he should know what's going on here, okay? When I look at financial statements, I always look at current assets, and I compare that to current liabilities. Now, this is the balance sheet. This is the balance sheet as of December 31st, 2022 on that date. And it's a comparative balance sheet, so you can see the prior year. You can see changes in every single line item. Now, one thing that Jeremy Lefebvre, the hero of YouTube that has helped so many people build wealth, according to was it Bankrate? Yeah. Oh, thank you, Bankrate. You did a service to everybody by shilling Jeremy Lefebvre. According to him, Mr. Financial Genius, Lucid just incinerated cash. Well, that's not necessarily true. You can see their cash balance went down pretty significantly. Okay, it went down from $6.2 billion to 1.7. That's because they put 2.1 billion in short-term investments, and they have $834 million of inventory. Okay. That's where a significant chunk of their cash went. Short-term investments to get a little bit more yield and buying inventory so you can resell it. Okay. So that's what car companies do. Okay. They also got a bunch of property, plant, and equipment. That's factories, whatever, that doubled. Right of use asset, that's leases. They hope they started more leases. Long-term investments and other non-current assets, whatever those are. That's where the cash went. Okay, and obviously they did burn some in operations. But overall, their assets stayed exactly the same. Basically, there's really no change in assets. Now, I would hazard a guess. Oh, their total liabilities went down. Interesting. So it looks like their equity, the company's total equity went up year over year. I wonder how that happened. Let's investigate, okay? So first, let's compare current assets, 2.9 billion, to current liabilities, 937. This company is probably not going bankrupt within a year. They have billions of dollars in cash or cash equivalents that they can use to pay their short-term debts, okay? They're going to be fine, at least in the short term. Let's see what else they did. So they had a pretty significant increase in current liabilities. They had a common stock warrant liability that had a massive write-down. Now, I guess what that means is because the stock got so wrecked, that probably had an impact on the total debt that they owed with common stock. So apparently there's warrants give you the right to exercise and, get shares of the company. And when the value of the stock goes down massively, really how much you could potentially owe people for exercising of those warrants goes down pretty significantly. So that went down massively. Okay. Long-term debt stayed flat and other long-term liabilities went up. I don't know if that's leases or whatever. Now let's look at the equity section. Why did their equity go up? Well, all from common stock. What a shock. Now, oh my God, they lost $1.3 billion in 2022. $1.3 billion. Okay. But you can see their additional paid-in capital went up. So they're just issuing shares and people are giving them money. All right, let's look at revenue. So for the 3 months ended December 31st, 2021, 257 million. So obviously these growth rates are insane. Look at these growth rates. They 10x, their revenue 10x basically year over year. Does that mean anything? No. Why? Because it was such a small company that the revenue growth, while it's very impressive, isn't going to be sustainable. Now, here's where Tesla clowns always get confused, okay? I want to explain this to you. Is Lucid a better buy than Tesla because it has 10x, 1,000% year-over-year revenue growth rate? Is it? I don't know. Is the reason their revenue growth so high is maybe because they started from nothing? Yeah, that's why I don't get impressed by Tesla's revenue growth rate, okay? Oh, look at Tesla's growth rate versus the other auto manufacturers. Yeah, it's a smaller company, you clowns. Anyway, let's look at the gross profit. What is their gross profit? And we'll compare that to Tesla. Oh my God, their gross profit is going to be massively negative. Oh, okay. Oh my God, they're burning money hand over fist. Woo, baby. See, divided by 257,713. So their gross profit is negative 138%. Okay. So every time they sell a car, they lose 138% just from the cost that it makes the car. So you buy a car for $600 and then you sell it for $250. Basically, that's what's going on here. Now, why is that? Probably there's a bunch of factory overhead because they're not making many cars, and that has to get allocated to the inventory. Okay. And a funny thing is, when you go up here and look at inventory, okay, these are future expenses that are going to hit that income statement. So what they're doing is they're allocating a lot of expenses to fixed overhead because they have these factories, and in accounting, you have to allocate that overhead to the inventory as you produce it. But when you sell it, that expense is going to hit the income statement. So I'm looking here at a massive future expense that's probably going to, they're probably not going to make money off this for a long time, of $834 million. So keep that in mind. Okay. Usually when you see inventory on a company's balance sheet, if they have a positive gross margin, well, they're going to generate more cash than the number you see on the sale. That ain't the case with Lucid, at least in the short term. Okay. So this is going to be a lot of expense going into the future, at least until they get their costs under control by increasing their economy of scale. Okay. So overall, their loss from operations in 3 months, was $749 million. So it looks like their losses are accelerating. It looks like the biggest increase is cost of revenue by leaps and bounds. Okay. All of that expense, all that fixed overhead that was allocated to those vehicles is slamming on the income statement every time they sell. Okay. That is a big loss. Let's see. So they also had a benefit from a change in the fair value of a common stock warrant liability. So basically, like I said, if we go back to the balance sheet, we can see that they had a warrant liability where they potentially had to give out shares of common stock to people if warrants were exercised. Well, because the stock price went down, who's gonna buy the stock? Who's gonna exercise their warrants? Nobody. So the liability went massively down. And when you decrease a liability, it's actually it's a gain on your income statement, basically. Non-cash. Okay. So their loss doesn't look nearly as bad, right? I mean, look at this loss before a provision for tax benefit. It looks so much better because they had a gain on warranty liabilities, whereas year over year, they had a loss on warranty liabilities, okay? So basically, you have these massive fluctuations in their net profit because of these warrant liabilities. So what I would do, I would look at loss from operations. I wouldn't even factor, at least for now, if I was looking at this company, I wouldn't even factor this crap in because it's just going to fluctuate all over the place as the stock goes up or down. That's what's going on here. Look at this massive swing. It's crazy. So you may think, oh, their profit's getting better. Oh, look at their profits getting better. It's not. It's all warranty liabilities. That's the only reason their numbers, look at this. They had a net loss of $472 million versus $1 billion the prior quarter of last year because of warranty liabilities. But their loss, it's nasty. It's gross, okay? This company is not improving from an operational standpoint. So overall, let's see. Let's go look at the statement of cash flows, okay? You taking notes, Joseph? Okay, so we got net loss, adding back depreciation, amortization of insurance premium. I've never seen that on an income or a statement of cash flows. Stock-based compensation, of course. We got an add back here. Inventory and firm purchase commitments, write-downs. They're writing down their inventory. That's interesting. So it's almost like all the money they spent in the inventory, it's worth less than the market value of the inventory. So they've been writing down, they've been decreasing the value of inventory, which had a pretty significant hit on their income statement. Okay. They subtract out the warranty liability. So we go all the way down, right? And they burned $648 million in 3 months. $648 million in 3 months. And from operations over the whole year, they burned $2.2 billion in a year. If that continues, I mean, if you multiply this by 4, 6, 12, 18, 24, God, I mean, they are going to incinerate this cash. They can incinerate this cash within a year. Easily. Easily, if they keep accelerating the amount of cash they're burning from operations, if you project out the next 4 months or the next 4 quarters with the cash burn they have, this could be all gone in a year. So you're looking at either a massive debt issuance or a massive dilution event. Oh my God. Let's see. All right, let's look at their cash flows from investing. And you can see they're spending money on property, plant, and equipment too. So in one quarter, they spent, let me make sure that's a quarter. They spent almost 900 something million dollars. Okay. Yeah, that cash on the balance sheet, they're going to burn through that pretty quick. They're going to have to raise money somehow. Oh boy. All right. And then obviously we can see positive cash flows from common stock issuance. So they're basically staying afloat. And they actually just had a massive issuance. Yeah. And that's going to continue. I mean, with this kind of cash burn, holy freaking crap, man. This plus the property, plant, and equipment, this is crazy. So I give Tesla crap, but oh man, this is garbage. This is garbage, okay? So, like I said, the big points that I notice is when you're looking at their earnings, I would pay attention and I wouldn't say discard the warranty liability, but just know you're going to see massive fluctuations in bottom line profit and loss because of these fluctuations in warranty liability with the stock price going up and down. I would pay attention to their cash burn from operations plus their capital expenditures over the next couple of quarters, and I would see how fast they're depleting this cash balance because there's probably going to be another dilution event coming up. I don't know, man. What do y'all think? Is this better than Tesla? There's a lot of Lucid shills out there. I don't get it. Lucid is the future, bro. Let's see. Oh my God, there's so many comments. Oh my God. My favorite stock is Strongman Personal Finance. That's right. Let's see. EVs are dead. AI is the future. That's actually funny you say that. The new craze is now AI. ChatGPT. ChatGPT AI. Stupid. Let's see. Lucid is losing over 1K reservations per month. Yeah, people are pouring millions of dollars into them. It's a cash furnace, man. In 3 months, if you look at cash from operations and investing, they burned almost $1 billion in like 3 months. It's like, oh my God. Let's see. Oh my God, there's so many comments. What do you think about Nvidia after its earnings today? I haven't even looked at it. I don't know. I suspect it's a clown bubble stock. What are your thoughts? I mean, from my understanding of Nvidia, a big part of its like explosive growth recently was crypto. At least that's what my understanding. I really don't understand much about Nvidia. I can just look at the financials and kind of give my thoughts. I know nothing about how the future of that stock's going to grow. But like I saw the massive explosion in the stock price, and I think there's some big links there with like people buying Nvidia chips for crypto mining or something. And it's like, okay, if this stock is exploding because of crypto, there's going to be a problem. There's going to be a massive problem. Let's see. Bump, 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 bump. I'm going to start a junk business and take it public so I can dump it on the market again. See, here's the thing. You start a business, you go public, you pay yourself a massive salary. Massive salary. Not stock options. No. Salary. Okay? And when the company eventually goes bankrupt, you've already pocketed millions of dollars in salary. So you win no matter what. You can't lose. If the company wins, great. You got stock. If the company goes bankrupt, well, you've collected $1 million of salary. You really can't lose. It's a great deal. I need to start doing that, man. Oh my God. Your channel's failing because you branded yourself as an efficient market hypothesis, but realize you can't sell scammy courses if markets are efficient. So now you're pretending you can value stocks with financials. Yes, the intrinsic value of Lucid is 2.15687. Thank you for your comment. Not a fan of Lucid at all. It's just a cash furnace, man. It's ridiculous. That's Tesla's competition. That's okay. Look, the only competition that Lucid is going to give Tesla is with the Model S. Okay, that's like rich people, like really well-off people. That's their competition. Obviously, the market for the Model S and the Lucid is nothing compared to what Tesla is actually aiming to do, which is produce 10, 20 million vehicles a year. And Tesla's true competition is legacy auto, 100%. It's not Lucid. Lucid is not Tesla's competitor. Maybe for one of their cars. Let's see. All right, guys. There's too many freaking comments. Hope you enjoyed the video. Lucid's a clown stock. Have a wonderful day.